All right. Welcome back. I don't want to beat the dead horse, but some other reasons. Like I said, title insurance helps or resolve problems that reimburse you for a loss that you incur. All right, that loss can even cover the lawsuit, which is something I was trying to say. So even if you fight yourself, even if you fight and prove that you're winning or you win, you're still going to have to pay for the lawsuit. So title insurance helps all of that, okay? Now, here's a couple different things I want you to understand about title insurance versus and I'm going to use the word normal insurance. And what I mean by there is the standard health insurance or car insurance. One of the things about normal insurance is it is a reoccurring cost, right? You guys are going to get used to this word. What's the word? What's the word? Exactly. Premium. A premium. You pay monthly premiums for your car insurance, right? $100. You didn't wreck the car this month, so next month comes along, you pay another $100. That's right. And you pay that reoccurringly over and over and over and over. Now, here's the cool thing. If you were a genius and you knew exactly when you were going to wreck the car and you did the math and you thought, wow, I'm going to wreck the car and do $3,000 worth of damage or $100 a month, that's 30 months. Get it? 30 times 100 is 3,000. If I wreck the car within the 30 months, I'm actually making money by having insurance. If I wreck the car after 30 months, I paid more money in insurance than it would to fix it. But we can't do that. So it's a reoccurring cost. Unlike title insurance is a one-time fee. It's paid at closing, okay? It's paid at closing. Still called a premium. The premium for the policy is X amount of dollars, just like the premium for your car insurance. Car insurance and normal insurance affect things in the future, things that are going to happen in the future, hence the reoccurring. Title insurance only fixes things that have already happened that we don't know about right now, like an unforeseen lien or an unrecorded lien or a mislabeled document or someone else forging documents, when we sold it and we find out it now. So it happens in the past. All the things with title work are historical, okay? Right, yeah. Yeah. There's a couple more things, so hold on, we're getting there. She wanted to know about face value. Yeah, we're getting there, hold on. Where am I? Historical. The value of insurance theoretically can be unlimited. You buy a health insurance policy and you get ill, and let's say all of a sudden you now have to have a bunch of operations and maybe chemo and therapy and other kinds of treatment. Whereas, it could be unlimited policy. Whereas if you get, and I'm using the word unlimited there, meaning unknown, unlimited. I'm sure somebody's going to say, hey, you've got a limit. But I mean, it could be 100,000, could be 200, could be 300. Whereas a title insurance only affects the face value of the policy, meaning the value of the house. I mean, you buy a $100,000 policy to cover your $100,000 home. That's the most they could lose would be $100,000. They're not going to lose this reoccurring bill for treatment like normal, quote unquote, normal insurance does. So the premium's based on one-time historical past stuff, but there's a limit to the loss, and the limit is the face value of the policy. Okay? The other thing, because of that, face value is based on the value of a home. So the premium, which, think about this, makes sense. The premium for a $100,000 policy, i.e. the value of the house, is less than the premium for $1 million house. All right? Makes sense to you, doesn't it? Certainly it does. I mean, if you're going to buy a $100,000 life insurance policy versus a $1 million life insurance policy, the cost of that policy is cheaper for the $100,000 than it is for the $1 million. Same thing with homeowners. I keep saying that. I apologize. Same thing with title insurance. The face value for a title insurance policy on a $100,000 home is going to be less than the premium for $1 million home. So, and you guys are going to start whatever company you go to work for, you're going to get a rate sheet or a rate card, just like other insurance salesmen. For $1 million policy, for a smoker, here's your payment. You guys got the same thing. I mean, I can hand one out to you right now. I got Chicago titles over here. So that I can look at $200,000 home is going to be, $650. I know the policy. Now, that's the owner's policy. The lender's policy, remember there's two of them, owner's policy and lender's policy. That's the owner's policy. They also will write the lender's policy, hopefully for the buyer, and they charge them. And that's called a simultaneous policy when they write two at the same time, like an owner and a lender. Theoretically, the buyer can get his own title work because they should pull the same stuff up. Really not fun at all when that happens. And you guys want to try and stay away from that situation. You want to make sure that, and you really can't legally, but you would hope that both sides use one title company, okay? So that you don't have to close with another title company. And the other advantage is if my client comes, or let's say I bring my client to your title company there, Bob, all right, and you're now working for, ABC Title. You're going to charge me an owner's policy fee, $600. If you also write the lender's policy and you have to change the names on it, this is one of those things about a glass half full, glass half empty, because you've done all the work. So should you charge nothing for the other side, or are we getting a break by you not charging the full price? You would write what's called a simultaneous policy, all right? Simultaneous meaning you're writing both the owner's and the lender's side. If you write both of them, the owner side's based on the face value, $650, which is what we just talked about, on your rate card. But a simultaneous policy may be just $125 or $150 because, hey, we've already done the title search, we've already done all that, and we did that for the owner. Well, now we'll take some of that information and use it for the lender, and we'll just switch the name from Mary Buyer or Mary Seller to Bob Buyer and charge him $125. That's called a simultaneous. Now, the buyer could go to his title company, XYZ, and buy his policy over there, but here's the problem. That's not a simultaneous policy. That's their first policy, so they're going to charge him a face value based on the premium of the property. So with us, if you write both of them at your title company, you're going to write $650 for the owner, and you're going to write $125 for the simultaneous policy for the lender. If we do it the other way, you're going to write $650 for the owner, and then he's going to Bob Buyer's going to use his over there. They're going to charge him $650 for the lender's policy because it's the only one they wrote. So there's more cost, and the only person that it's really hurting typically is either you as the buyer or him as the seller. Okay. Just like insurance policies, title work can also issue exclusions. You get a health policy that says, yeah, we'll take Raymond on, but we understand that he is not the sveltest of gentlemen. So diabetes may be an exclusion, which I'm not diabetic, by the way, for anybody listening at home or for all you guys. I'm not, despite what it looks like. I'm not. All right? I'm just saying that there could be an exclusion. So you need to make sure that you get with your agent that's your underwriter or your office manager so that they can tell you a little bit more about exclusions or defects. And we're going to talk about defects here in a little bit. Basically, in the end, when it all boils down to title insurance is your best protection to protect your ownership property rights. For those of you looking at home, obviously spell check is not working because there appears to be an error right there. Although, the cost may be high, it's only one time, dude. Don't worry about it. It's not like if you ever do the math and figure out how much you're paying in car insurance. I pay like for my 20-year-old son, and that's actually not right. 17, he's still in high school. It's like $135 a month. So if you do that math times 12, what is that? $1,800 a month somewhere. probably going to be cheaper than all the other policies, but it's a one-time that covers you and your heirs as long as you maintain the ownership and anything ever happens, somebody comes in, this title insurance policy is there to help. All right. Given the fact that the home that these people are buying, when you're looking at buying a $300,000 or $400,000 home, and your policy is $700, I know how most of us think, and I just did this the other day. You go buy a TV. TVs are so cheap now. I literally kid you not. It was like a $235 TV, 53-inch screen TV. I'm actually using it for my monitor at home, believe it or not, because I'm getting old and can't see worth an damn. So, yeah. So, like, the warranty for it was like $150. I'm like, no thanks. I'll just throw it away and come and get a new one. However, on home, it's a different story. You're getting a $300,000 or $400,000 house. Your insurance is $700. Well, certainly you're going to get it. All right, because the home that you're getting is probably the biggest purchase that most people make. So keep that in mind. Most of these people want title insurance. They just have no idea what it is, and that's where you guys are going to come in and help them understand what it is and how it works. All right? All right, let's move on.